From the trading desk of dailyforex.com, this is Christopher Lewis looking at the Euro US dollar pair. And as you can see, and I'm sure everybody's aware of, we had an extremely bullish session on Friday in the Euro USD pair as it skyrocketed after the non-farm payroll number. Naturally, it actually, as you can see, started during Europe. Europe had a pretty good session to say the least, anyways. And the fact that we shot up after the non-farm payroll might have been predicated upon the idea of the number 8.3. Granted, the jobs added was 165K, and 165,000 was more than expected, but the unemployment number or unemployment percentage also ticked up as well. So it looks like a lot of people are focusing on the 8.3 and not so much on the 1 point or the 165, and this leads people to believe that the Fed will ease sometime over the next couple of weeks. Perhaps the September meeting is probably the most likely point in time. But having said that, we have to look at the totality of the situation. And as I will review for you, I recently had pointed out a bearish flag which spoke to me of a 115 handle. And while that may seem a bit extreme at this point in time, you have to realize that this isn't based on time at all. This could happen over the next 2 weeks. It could happen over the next 2 years. So having said that, I look at the chart. I still have a very negative bias. You can see that 124 has held as resistance several times. Now, will it give way? Very possible. But I personally am waiting to see what happens once we get into this area, because once we get over 124, there is a huge cluster of resistance waiting all the way up to the 127 handle, and that is another 300 pips that we would have to climb in congruence to this knee-jerk reaction. So this simply looks like a typical case of, to me at least, of the market falling. It pulls back a little bit, it falls, it pulls back, and then it falls, and it keeps going. It's just part of the trend. Having said that, I am not buying the euro. I mean, even if the Federal Reserve does ease, that doesn't solve the problems in Europe, and ironically enough, it's probably because of the problems in Europe. The Europeans aren't really that close to enacting any type of thing, although it does look like the market's going to give them a little bit of a pass, at least, based upon the reaction for the short term. But, these cycles are happening very rapidly these days and lasting fewer and fewer days and positive reaction every time there's hints of QE. So quite frankly, I think this is a rally that's set up to fail.